Welcome, traders. August 5th, weekly meeting. This is my 3-year trading mark. I placed my first trade August 6th, 2020. Today, I want to kind of bring us full circle. I want to kind of lay something out, as clearly as I can lay it out. I think as far as trading and kind of the benefits that we have in this group, and how everyone, no matter when you start, can be wildly successful just by showing up every week at this time. So first of all, I want to kind of re-hit on something that I brought up last week. And last week I mentioned about Selena doing the order blocks, the weekly order blocks, the monthly order blocks, or whatever. I would really like for somebody else to start doing that. I know I might not have said that last week, said it like that last week, but here's my reasoning behind that. Whenever we started this group in WhatsApp, I did every meeting, every Saturday call. We started doing the 5 o'clock calls after the trading session, with the exception of Friday. I did every one of those. For a very long time, I did everything, every meeting and every call I did. And I'm not complaining, and nor did I complain while I was doing it. And Selena's not complaining. But what I noticed when I was doing it is people weren't taking it as seriously as they should have been taking it. And what I mean by that, there's a level of comfort when you just show up, listen, and get the information and watch for your trade to take place. You're still not feeding yourself, right? You're still dependent on somebody else to feed you. It's kind of like that baby that's on the mama's tit, and the baby is on the mama's tit, and then the baby gets so old, it turns into a little toddler. And now when the mom is out with company, the toddler reaches in the mom's shirt trying to get on the tit, even though that baby is capable of eating solid food, but it's just so comfortable and so used to feeding from the mom. And what we want to do as traders is we want to be able to feed ourselves. We want to come up with our own thought process, our own rules, our own guidelines, because eventually we're going to have to get to that point, right? Eventually, the things and the ways that somebody else trades and tells you how to trade is not going to totally benefit you, right? You're going to be unnecessarily stressed by trying to replicate what I'm doing, especially if it doesn't fit into your risk dynamic or your lifestyle, right? The thing that we get from a guy like ICT is his concepts work. Well, everybody's concepts work, but these concepts work on a fractal basis, right? So if you trade the 5 and the 15-minute chart or the 1-minute chart, the same concepts are true, and the market does the same thing. If you trade on the higher time frames, you can trade exactly the way I trade. But the point is, we have a system that works for everyone, and now we just need individuals to plug into that system. And I see you, Isha. Isha said she volunteered, which is cool. But I just want to keep a good rotation of people who are coming in and out of the sharing mode, right? Because when you start doing it yourself, it opens up an entirely different level of understanding, right? When you have to go and look at those order blocks, and you start looking at how they formed and when you could have gotten that trade, an entirely new level of understanding develops. It opens up for you, and you become a lot better trader, right? Because you go and you look every week, and every week you're saying, dang, I could have got in right here. Man, wow, it just crossed the moving average. Wow, I could have got in right here. And I could have stayed in this trade for 5 days or for 4 days. These things are very important when it comes to the development of you individually as a trader, because when you start seeing it for yourself instead of hearing somebody else say it, you become dangerous, right? So what I want to do, Isha, how long have you been trading?
Just started, took my I think when we had our first meeting, like in February, when I started to really just trying to dig in, and I don't care, win, fail, I'm in it every day. And I took my first trade probably like that week, matter of fact. I think I was with you guys. Yeah, February was when after I looked at all the videos, and then that week, and then I just been on and off, just trying to see what it looks like. But it hasn't really been that long. But just really,
how is your trading?
I'm doing pretty good. I'm doing good. I just have, we've talked, offline, and just whenever I have those, like, I feel so confident that whenever I lose a trade, I'm like, I can't believe I lost a trade, and I'm calling Todd. you know. So that's how confident I am in it. And I'll just stop trading for, like, a couple of weeks and get upset, and that's just been my journey. So my journey right now is I'm working on my psychology, and just knowing, and really just trying to remember, you have not been doing this that long. So, but yeah, I haven't been doing it that long at all, but just showing up to the group every day, step in. Then when I finally felt like, you know what, I could do a really good analysis and not lead everyone over, astray, I was like, hey, yeah, I could step in, and it actually has helped. And you learn more by teaching people. So, and I feel more responsible, because I'm like, okay, I don't want to be the one to tell people it's a sell and it really was a buy. Am I going to know everything? No, but I don't want to just be leading people over a cliff either. So I take that position more seriously, if that makes sense, or it's more of a weight on me, and it's more of a challenge, and it makes me want to step up more. I look at videos on a daily. I, especially market analysis, I look at it on a daily. Now I'm working on more of my entries. So yeah, but yeah, I just started. And that's me learning and trading at the same time.
I think that is I think that's very powerful. And it kind of brings me to my next point, right? I know we a lot of us went the funded route, right? And I stand by the funded trader route. I really think that when you try to hone in on your risk management, I think that you become a lot better trader. I think that that kind of propels you to a level of trading that you might not otherwise reach, if you're just being an individual and you're trading your own money, right? But I think there's benefits to both sides. With that being said, the challenges have came a long way from the way that they used to be, right? You used to get a challenge and you got 30 days to complete this challenge, and you feel the pressure of being rushed. So you blow your account because you got to make this money and you got to make it at this point in time. Okay. And now, the industry is evolving and they've taken the time portion away from the challenge, right? Most people probably don't think that that's very significant, or they don't understand how significant that is. But I just want to take a few minutes to peel back the onion, so to speak. And I want to go. Let me share my little screen. I want to go to the Discord because I want to pull up these order blocks. Okay, and if y'all got a little time today, we want to take a 10K challenge, right? And let's just let's just say the last 3 months, right? Y'all want to go back? Y'all want to back test the 10K challenge for 3 months?
Let's get it.
Okay. So the way this is going to work is I'll let y'all choose any pair, any pair that Selena put on this list. That's what we're gonna trade with. And I want to explain the significance of that time period being taken off. Because it's some of us in this group that still haven't passed a challenge, and we spend a lot of money on the challenges, right? And then there are some of us in the group that will pass a challenge and haven't received a payout. And I want to demonstrate why that should be an impossibility at this point if you belong to this particular group. Okay, so where do you put that? You put the swing trader?
Yeah,
Is it signals or is it the
it's in there.
The
no,
channel.
swing traders channel? Okay, yeah, they move everything around on it, brother. So, all right, I want to go back. This is 6. Okay, we can start if y'all want to. We can start right here at 6:16, right? She dropped these order blocks. I don't want to look at the comments portion. I just want y'all to look at over here and tell me which one we're gonna go with. I wish there was a way we can erase this comment because the comments kind of tell you.
Go up.
Go up, Todd. That's
Oh,
the
okay.
previous. Yeah, just go up one to the Yeah.
Okay, so this which you got to tell me how this.
No, if you go up, you will see it without the comments.
Well, this is it, right? 6:18.
But that's a 2-week order. But if you go up, then you have the month. Then you have it from the start of the month.
Okay, but okay, that's cool. I'll do it. How you
Go up again.
Keep going.
Yeah, because
just go to the first of the month.
Yeah, go to the first of the month because otherwise it'll be a bit
6-4. Is it 6-4?
I think so.
Yeah, you know how I do it when I label the order blocks. It's that Sunday of that, that week. So it's the
5:28.
candle,
So
the weekly candle, not the end of the month.
So can somebody look up 5/28 and see if that's the 1st of June, the Sunday, the 1st of June?
Yes, it's yes. If you go on TradingView and you highlight that candle, it'll say 5/28.
Yeah.
And I think Felicia was doing it the same way. And I'm sorry if I'm going in and out because I'm in the woods.
Okay, let's go to the weekly. Which pair? Y'all can pick any pair on this.
UJ.
Oh my gosh, UJ, the 1st of June.
In the woods. What you doing in the woods? Black people ain't supposed to be in the woods. You know that.
I'm a country girl, so we going fishing.
Okay, so let me. delete this order or replay.
Can't see your screen.
Yeah, I'm still on the thing. I need to cancel all my markings because it's not going to work if we cheat. So I want to remove everything before we even get to the screen. Okay, so we're doing UJ. It did guys. So Selena's calling for guys playing 324 pips. Okay. So let's go to UJ. Remember, this is a 10K challenge. Stop share. Share screen. UJ. Okay. So basically,
what would your risk be?
well, let's talk about it. So basically, what Selena is saying is that this is going to pull back 324 pips, right?
Mm-hmm.
No,
Okay.
let me clarify real quick. So what that means is
It went
that
324.
candle went 300 and some pips, so we wanted to pull back half of that.
Okay. All right. So I just wanted to make sure y'all was paying attention. Okay.
Whatever.
Well, hold on. We're fibbing the candle. God's plan is we're going to pull back into the zone. Okay. So if you're taking a 10K challenge, how much money can you lose per day?
Said 500, right?
$500.
Mm.
So now, do we think the trade is going to go 500 pips against us? Before it
No.
pulls back? Is it going to go 250 against us before it pulls back?
No.
Okay. So what can we risk on this trade?
1%.
Huh?
1%.
I disagree.
Mm.
Okay. So $1 a pip is 500. It takes 500 pips basically for this to go against us. $2 a pip, it takes 250 for this to go against us, right?
Right.
Does everybody understand that? Because if you don't understand what I'm saying, it's going to mess up. It's going to mess up the way that you understand. What I'm trying to say here is if I'm risking $2 per pip, right? If I'm risking $2 per pip, it takes 250 pips for this to go against me. So what I really need to do is figure out how far do I think this can go up before it goes down into my direction. Does everybody understand?
$2 per pip. Sorry.
Yes. How far do I think this goes against me before it changes directions? If I'm doing my analysis, I understand that this is the push down. There's an imbalance somewhere around here, right? Ain't that what you would do, Leandra? You would find your imbalance?
Sorry, I said that out loud. I meant to.
What's that?
Yeah, I'll go down the time frame to see if there's an imbalance.
Here's an imbalance right here on the daily. It's above where our price is, so possibly it could go close that imbalance and come down, right?
Yeah, it's probably order. I can't see the price. Yeah, there's an order block above that imbalance because the wicks and the candles are overlapping. So that's an order block on a lower time frame.
On the 4 hour, there's an order block right here.
Yeah.
Right? So do we expect price to respect it? Or do we expect price to push?
Well, that's a quarter level.
So you're saying there's confluence that the 141 flat level is where the price is probably going to turn around, right?
Yeah, although 141 500 level as well. So that's another quarter level. So you've got 2 there. But if you probably go down another time frame, there's probably a new bearish order block on like a 15-minute or something.
I'm with you, but I just want to, in a ballpark figure, we're basically saying this thing, we'll give it 100 pips to play with, right?
Mm-hmm.
So I agree. God's plan calls for 100 pips too. So if I got 100 pips to play with, and I got $500 that I can risk in that 100 pips, what's my lot size going to be? Somebody pull out a lot size calculator for you, Jay. Anyone?
$500 to risk and 100 pips drawdown.
Yep.
Oh.
Be a 5 lot, wouldn't it?
That would be safe on you, Jay.
What? How much risk did you say?
A 5 lot.
No, the percent.
5, not 5 lots. $5.
I'll say 0.5.
$5 a pip, not a 5 lot, but $5 per pip.
Right, that's a 0.5.
Right. Everybody understand how we came to that? Now, because this is a JPY pair, we could actually use a larger lot size than 0.50. But I like doing it this way because this will keep us below where we need to be. Does everybody understand how we got $5 per pip?
Yes.
If you do not understand, this is the time where you say, hey, I don't understand. Drop a 2 in the chat if you don't understand, because this right here might be the key to your financial future.
You're not doing it by percent. You're doing it the other, you're multiplying the pips that you're risking.
Right. So let's explain this. Okay. Let's explain what we're trying to do. We have we think that price could push up 100 pips from here. Actually, it can push up about 90 pips from here is about the highest it could push up, right? So we want to protect a 100 pip area. We want to have a 100 pip stop loss. So let me put my position tool on here. And I want the stop loss to be 100 pips. I want my take profit we can fine tune the take profit. Let me drop down to the 15-minute. It could probably be here, but just to be safe, let's just put it in the middle of the zone. Is that cool? Where would y'all put y'all's take profit?
Yeah, at the swing low.
Let's
That's
just,
the safest bet is the swing low. It has to go there.
so
Even if it's going to go higher, it has to go down there and break that swing low and then go higher.
okay.
I mean, it doesn't have to do that, but that's what you should expect.
Right. So this is the swing low in the zone. It's 179 pips, right? We have a 100 pip stop loss. Let's talk about why. Andrew, you say you're confused. Speak on it. What confuses you?
I think you just because you're calculating the lot size.
Just do the math, man. Fuck, just do the math. It's 500 divided by
Okay.
100.
So this is a 100 pip stop loss. We can lose $500. So $500 that we can lose divided by our 100 pip stop loss is $5. Everybody understand that?
Yes, thank you.
So that's why we're using a 0.50 lot size. Now, if we pull up a position size calculator, I think this is important too. That's the only reason I'm bringing it up. If we look at UJ, account size is 10K. Stop loss is 100 pips. We got one position. I'm just going to put 1% risk. Really, the risk ratio doesn't matter. The 1% is what I want to see. I mean, the 100 pips is what I want to see. So if $100, let me say 5%. 5% risk, 100 pips, that'll be $500. The lot size should be a 0.71, right? We're using a 0.5, which is fine. We don't have to go up. Really, we should be using a 0.7. And the reason it's like that is because the JPY is not worth as much as the dollar. Does everybody understand that? So
Yes.
We could use a point. Let's just use a 0.6 instead of a 0.5, okay? Because if we use a 0.6,
It's safer.
exactly.
You don't want to hit $500. That's what you have to lose. If you hit 500, you're going to lose. You don't want to hit 500. You just want to have that buffer, right?
Exactly. So listen, we're going to use a 4% risk ratio. We're going to use a 0.57, right? Because that'll give us $400 every 100 pips. Everybody tracking?
Yes.
Okay. Yes. So let's go back to the trade and let's play it out and see. I'm gonna go to the 4 hour just for argument's sake. Hopefully this doesn't hedge us out of the trade. Oh, money. I hate winning, guys. I can hate it. All right. So let's talk about how many pips we actually caught. 179.6. Okay. So let's go back to this position size calculator because we did use a 5.7 lot size, except for our stop loss 179.6. I know it's not our stop loss, guys, but we just want to calculate how much money we won. You know what? That's not the way I got to do it. A 0.57 for 179.
That's $895.
It's not it can't be 895 because it's short. It can be 795.
Just calculated $5 times 179.
No, this is a 5.7 right here, right?
So that's $5.70.
Follow me.
Todd, I dropped a link in the chat so you could calculate the profit. I think that'll work in the general.
Let me see. In the general.
What was the final profit? Was it 100 pips?
It's 179.6. it would be 700 and something. Let me see. I gotta find this link. Sweet.
$5.
It's in Discord in general.
Discord.
179.
So if you
It
have,
should be 1,000.
it's not 1,000 guys. It's less than 800. All right. Let me see. Trust. If 100 pips is $400, and we got 179 pips, we didn't quite get 200 pips, so we can't have $800.
You see the link?
Yeah, I see it. Do y'all see my screen?
I'm confused.
We see a challenge.
Okay.
And while he's getting to that, this repetition that we're doing, sometimes it feels like it hurts, right? We should know these things. There's no way we should be trading if we don't know this part, right? And a lot of us are trading and still don't know this part. So we got to get this down, right? This is what's going to change your life. It doesn't matter how many times we got to repeat it. We will repeat it, but there's a lot of people that have been here long enough that should know this already. It's going to change everything.
Okay, we got to know the entry. Our entry was at 140. Hey, Isha, can you put this in, please?
Yes, I can.
140.64.
Okay. And the close was?
It was at 138.834.
And that was a sell. So it says $228. That can't
Okay.
be right.
No,
So UJ 179. So 140.64 and put 83. Let's see if that does it. I had
Okay.
trade lot size. Oh, maybe that's
0.57.
what was the okay, $727.88.
Perfect. It is. Do y'all understand why it's 727? Probably not, but the point is this: if you know that 100 pips is going to give you $400, and then we got 179. The 79 pips is not going to give you quite $400. It's going to give you 3 and change because you didn't get the entire 100 pips the second time. You got the first 100, which is going to give you $400, and then you got you got 79 pips, which gives you 300 and change. So what's our total three? You said 700 and what?
$727.88.
Okay, so news flash, guys. If we taking a challenge that is a 8% challenge, we're about $60 or $70 away from passing the challenge. That was one trade. 1 week, one trade. If we're taking a challenge where we got to make 10%, we're 7% closer to passing the challenge. Who's still confused? I want to talk about this because this is very important. Who's still confused? Drop a 2 in the chat if we need to cover this more in depth.
I also just dropped the, like, in word form in an education, how to calculate your risk. If you're just using 1%, so you can do.
Listen, y'all. Listen, I hear you, but I don't want to confuse using 1% with what I'm talking about right now. It's different. This is different, because what we did this time, we calculated basically we ran a 5% We calculated all 5% and we put it on this one trade. So I don't want to confuse anyone on the difference between calculating 1% and calculating the 5%, right?
Got it.
My point to everybody in here is, damn it, you have the effing direction every effing week. And I'm saying this with emphasis because every freaking week, I am 100% sure of the direction of the freaking market. And we have not been wrong this year. Dude, we haven't been wrong this year. Think about this for a minute. In August 2020, when I started trading with Ruby, I used to tell myself, geez, man, if I just knew the direction, I could be successful as a trader. All right, Leandra asked why I use the entire 5%. Okay. Because I knew I wasn't going to lose, Leandra. That's exactly why. That's if you're asking why I used that 100%. What I want you to do is think about, like, I used the entire 5% because I knew I wasn't going to lose. I mean, that's the God's honest truth. I knew that this trade was not going more than 100 pips against me. I knew that, like, without a doubt. It's the same way I know that when I get a 2-week order block, damn it, the price is going to respect it. Everybody who's ever traded and everybody who's ever made an educational video has always told me that the higher time frames are solid. That's what they've always told me. Now, everybody has to come up with their own conclusion and trade their own way. I'm only here to show you what I know, not what I think, what I know with 100% certainty.
Hey.
And what I just showed you was we wasn't going to lose this freaking trade, period. Now, I know I would have qualified an account with that one move. I would have qualified. 179 pips, bruh. We talking, that's a 20% move. I'm not trying to get you there. I'm trying to tell you to pick your trade and let's talk about it. And let's look at it on the chart and let's put our money where our mouth is. I want you to be as confident as I am because you're in the same group as I am. And hopefully you're seeing the same thing that I'm seeing every freaking week. It's not been a week that I've got up here and said, damn, that didn't do what I thought it was going to do. Think about this, dude. On Tuesday, I got on the call. I said, hey, man, if you bought UJ, because that's what we do, we buy to sell. If you bought UJ, man, you made your 10%. It's 200 and some pips up. I didn't expect it to go this high, but if you bought it to sell it, damn, you're rich. Y'all remember me saying that? I said, damn, if you sold GC like me, you made your money. Y'all remember that?
It sounds so braggadocious, but we are on fire.
On fire. But listen, here's the part this is the part that I want to bring out. It's not those two that I had right. Here's what I said. I said, damn. I said the US 30 trade didn't do what I thought it was going to do. That shit did not sell. I said, you know what? Once it went past where I stopped looking at it. Let's pull up US 30. What happened with US 30?
Everything.
It's so right to my damn area that I had highlighted where it was supposed to sell. God, no. Listen, y'all. Listen to what I'm telling you, man. You don't have to. We don't have to be 100% correct. You can just sit on your move. The move is, hey, man, this is going to sell. The bottom fell out after NFP. NFP is a difficult time to trade because it's news related and things move a little bit differently. I got it. I'm in 100% understanding with you as a trader. All I am saying here is if we take these trades and we give ourselves some grace, what I mean by grace is some stop loss, right? Some stop loss. We gave ourselves 100 pips of grace with that UJ trade. 100 pips. Now, I mentioned this before when I brought this God's plan thing up, right? I said, man, there is not a trade guru or trade coach I've ever heard say use 100 pip stop loss. They all tell you how dumb it is. Never have they said use 100 pip stop loss. But if we just used 100 pip stop loss and we made 7%. If I can use 100% stop loss and make 7% on every trade, I will out trade the industry. They not making 7% on their trades. That's a lie. But we don't have to brag and talk anymore. We can go to our next trade. Let's go to our next trade. Let me stop share. Hopefully, we kind of went off on a tangent, but hopefully you understand why I used the 5%, Leandra.
And using it where you're supposed to use it, right? That's the key to everything. You have to be in the right position. That's why we talk about the 78s. You wait for that 78 and then you use this strategy, right?
But this, my point is, Selena does the work for you every freaking week. Every week.
Hasn't been wrong since I've been here. I've been saying that. Like, how are people not following this? It's a godsend. And the beauty of it is that it's what the chart says. It's not what she's coming up with. That's what the chart says, and you have to follow what the chart says.
We could all double and triple check. So here's our next week. Which one are we rolling with, y'all?
US 30.
GU.
Hell no, I'm not trading US 30. But listen, I know some of y'all do, but I'm speaking for the majority of the people, and the majority of the people aren't going to pass trading US 30. It's too much play. So let's stay away from the indice, right? I'm not opposed to you, whoever said US 30, or Leandra, or Mr. Skinner. Like, we have people who are bosses on US 30. I'm not going to pretend that I'm one of those people. So
GU.
Okay, GU. And if y'all want to do this with an indice, I would defer to Mr. Skinner or Leandra, who traded repeatedly.
Can we do UJ or one of those JPY pairs? They move a lot in 1 week in both directions.
Well, I'm with you, but we used UJ for that first trade. Now,
are we moving on to another one?
Yeah, this is trade number 2. This is that next week. We're going to go to GU, right? GU is bullish. What does that mean?
Sell to buy.
Sell to.
All right, let's look at it. Let's look at it. Can y'all see my screen? Probably not. All right, where are we at as far as pricing, dude? Like what was our price?
Okay, we see you. Yeah.
We're at 700. How much did we make? 700 and some dollars on that trade?
727.
Okay, we're at 727. And what week was this? This is
week 2 now.
Well, I know. I need to go back to see what week this order block was.
Oh.
You 6-4, 6-4, 6-4. 6-4. Guess it would help if I get on the weekly, huh? Okay. So we're expecting this to buy, right? So we got to sell it to buy it. All right, good folks. First thing we do is we fib this candle, right? Y'all tracking? Or y'all just acting? Y'all tracking or y'all acting? Because some of y'all acting. Do y'all know what to do? Or y'all just watching? Hey, I'm not helping myself. Exercise ain't for me. I'm trying to reenact what you would normally do. And why are we fibbing this candle?
Because that's the
Trying to find the golden zone for the retrace.
We're trying to find a zone for this pullback. We can see it's already started a pretty good pullback. Here's our zone. So now we have to drop down to see what's in our zone. The 4 hour, I mean, there's a wick. Let me drop down to the 15-minute. Okay. What I like about this is you can see this impulse move. And then you can see a pullback. So what I want to do is fib this impulse move and see if we can get a 78% pullback. You see that number 78 again, right? Okay, the 78 is here. Right at this order block. All right, I'm gonna delete this fib. Do y'all understand why I have a 78? So there's a 78 pullback, which is right in our golden zone, right here, which means that I would probably look for my buy in this area. We're selling it to buy it, but I would think that we get a buy in this area. Now, do y'all agree or y'all disagree?
Agreed.
Who disagrees? Who disagrees?
How
Nobody.
many pips until it gets to that area?
Not very many.
I don't disagree, but it could pull
we
back
went-
further. 78.
15 pips.
Okay.
So here's the thing, guys. If you're taking that 8% challenge, let's look at this. This is where y'all kill me, man. This is where y'all kill me. We need one trade to win the challenge. It's like Eminem and his 8 Mile. We need one, you know. We need one.
Wait, how many?
We need one trade. We need 3% or actually less than 3%, right?
In one trade.
Yeah.
Just one.
We need one trade. Hey, we need one to make 3%. So here's where I'm going with this. If you need one trade to make 3%, I don't care how big your stop loss is, right? We can protect this whole low. It can be 138 pip stop loss. And we kind of just want to get in the trade, to be honest. Let me go down to this area just to see.
So while he's heading into that, understanding that you don't have to use the complete lot size. You can use a lot size that is not going to drag you to $500. Just use a lot size that'll drag you to 250.
Exactly.
Whatever that is. And you, as long as you catch the move, you win.
Exactly. That's the entire point here. So when I look at when I pull back and I look at this chart, right? I don't have to be the smartest dude in the room. I think that this trade needs to push up to at least this level, right? And all I have to do is make sure I don't get stopped out of this trade. This is a bullish order block. I can just protect down here to the bottom of this order block. I'm a hedger myself. You don't have to hedge. I don't know if you hedge or not, but I do it. Again, I can use 108 pips on my stop loss because I just want to get in the trade. So if I have $500 and I got 108 pips, what's my lot size? $500 divided by 108, or we can go and go back to that position size calculator.
4.62.
0.46.
Okay, 0.46. And I'm fine with it. I don't need it to be exact because I only need to make a couple $100, like $300 to make 10%. And if not, I got another week. This is week 2 of the freaking challenge. There's 0 time limit. My point to everybody is we shouldn't be concerned with how fast we pass this challenge. We just concerned about our safety, right? Because you don't go to your boss or you don't go to the pay window at your job at the end of the first week looking for your freaking paycheck. Most of y'all get paid every 2 weeks. I had a job, I got paid once a month. But my point is, let's just be realistic about how we want to play this. Okay. Y'all ready to take the trade?
Yeah.
My hedge goes right here. Maybe some of y'all use a stop loss. You know, we get stopped out. Ooh, 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 ooh. Woo. I know some of y'all had some booty pucker factor was y'all's booty pucker factor was tight. Okay. Oh, Leandra picked the trade, and my girl Elfie picked the trade, and somehow these 2 dumb women picked 2 winners and helped me pass my challenge, right? So I don't have to be the smartest person in the room. I could follow Elfie and Leandra to the win and have my account passed in 2 weeks.
And Alicia.
Yeah, well, listen, my point is this, guys. They're not dumb, right? They're not dumb. But my point is this. Sometimes we outsmart ourselves and we outthink ourselves. Now, I didn't pick these 2 trades, so you can't say, well, oh, you cherry picked. Hell no, I didn't do that. Leandra picked the first trade. Elfie picked the second trade. And somehow I win 100%. I'm 100%. 2 for 2. Now, let's just do the math. How much money did we make? We got 336 pips, 336.4 pips. At a $4, what is it, 4.6?
What was the entry and what was,
I'm
we
sorry.
did a,
Okay,
okay,
each it
so-
went by. The entry was 1.24334.
1.24334?
Yes.
Uh-huh. And then the close was?
1.27698.
And what was the lot size?
4.6. A point 0.46.
And we bought that.
Mhm.
It was 0.4. Oh, okay, wrong. Here, that was GU, right?
GU, $4.60 per pip. It's a true $4.60 per pip too.
All right, give me that, the
Let's-
beginning price again. One
let's-
point,
Let's just do it like this, because we know this is a real $4.60. $4, 4.6, that's $4.60 times 366.4. Overkill. That's $1,200.
1456.
1456. Dude, we could have passed the challenge in one trade. So do I have any questions?
Add a position.
Huh?
Add 1, 2, 3 positions.
Yeah, you get into stacking. You'll get
Wow.
into your stacking, but that
Listen.
one position.
Listen, dude, I don't want to get advanced. This is very
Right.
You just said that you can pass the challenge in
well.
one
No,
trade. And this,
but hold on. This is our second trade. The first week we took one trade. This is the very next week, guys. Think about this. How many of you have passed the challenge? How many of you have gotten paid? I have to ask you, why? Why not? Why haven't you passed your challenge? Why haven't you got paid? Now, I want you to think about what I'm doing here. Think about this. This is not rocket science. This is not some hidden code. This is not some backdoor bullcrap. I took 2 trades with 100 pip stop loss on purpose just to show you, because none of you believe in 100 pip stop loss. None of y'all do.
Don't believe it.
Don't believe. Y'all don't believe in it. I took a trade with 100 pip stop loss and I made 7%. I took a trade with 108 pip stop loss and I made $1,400 freaking dollars 1 week. How many of you make $1,400 at your job in a week?
After I work about 75 hours.
Yeah, when all that effort, when you just over here pushing buttons, you pushing buttons.
Brett,
Exactly.
all I'm telling you is, and listen, this might not have been a week. This might have taken longer than a week to play out, right?
yeah, I'm looking at how long it took.
Well, I don't care. I'm not concerned. So this took about 2 weeks to play out. And really, it wouldn't have taken 2 weeks because you would have closed this trade when you would have made your money. But my point is this, guys, this is my point. I just demonstrated to you exactly what I do, right? The concern is not how much money you're going to make or how fast you're going to make, right? We have the answers. It's like somebody coming to algebra class or calculus class, or if you're a medical student, somebody asking you these questions. You have the freaking answer key to every question that's asked. We talk about it every week. We say every week, this pair is going to do this. Why are you trading something different when you have the answer in front of your face? Selena writes the order blocks down. All you have to do is do what you know must be done. Freak, we picked GU. Hey, we didn't even sell it to buy it. We just waited for the freaking thing to get to where we thought it was going. and we bought it. If you've taken a challenge and you haven't passed, why haven't you passed? This is a rhetorical question, because if you've been a part of this Zoom today, damn it, you have no excuse to ever fail again.
Right.
I'm not saying that we can't lose a trade, but what I'm trying to show you is I used a stop loss that guaranteed a level of success. If I had tried to use the stop loss where I thought it was going, guy, you see this? I lost. It wicked all the way down. It came to the 78 and it went up. I don't care that it came to the 78. Yeah, I could have used a smaller position size if I had just waited until the 78. I could have got paid a lot more money. But at the end of the day, it's about getting paid, period. Period. It's not about max. Listen. Y'all go to work and none of you guys own the company, right? None of y'all own the company. There's somebody at your job that makes more money than you, but your punk ass is not willing to go to college or go get that extra degree or go do whatever you got to do to make what that other person is making. So why are you trying to squeeze in every penny from the forex market when you can just make you can make 3 times, 4 times, 5 times what you make now at your personal job just by using a larger stop loss? You have the answer. We know where the market is going. I asked somebody on the call this morning, hey, did you make money? And she told me she didn't make money because whatever, maybe her entry or she got stopped out. Why? Why did you get stopped out? When you knew the trade was going up. Some people don't know. They don't have a clue what direction the market is going, so they get killed. I got killed for a whole year because I didn't understand the direction. Now that you have the direction, right? Once it starts going in that direction, you can start cheating and adding to, as long as you don't add too big to blow your account. You can cheat by adding. You don't have to try to make your $1 million this week. Make $400 this week. Then add it next week, make 400 more. That's $800. That's a car note. Some of y'all paying a car note. That's a car note and insurance. Hopefully. Listen, man, like this is for real. Like this, what we're doing here changes lives if you allow it. And we have the answers to every test question, man. Every week we've not missed. And I'm not saying that trying to brag. I'm saying that as a matter of fact. I'm not the one that's writing this information down. I'm not. Y'all see Selena made these spreadsheets. I didn't pick the trade. Freaking Elfie and Leandra picked the trade. They have nothing to do with me. All I did was just get in and sit down. I used 100 pip stop loss because I ain't greedy. And in 2 weeks, think about this. I used 100 pip stop loss 2 weeks in a row. And I made 700 and change the first week. And I made 1,400 the second week. If you add that together, that's $2,100.
Now look, you use 700 to 14. That's a double, right?
Yeah.
You put it together, that's a triple. And then you take the 2,100 and turn that to 42. And then the 42 to 84. Come on, this is compounding. This is what we do.
This is crazy. And I want y'all to think about something. Purposely, I did not even add that 700. Like really the account was at $10,700. I didn't, when we risked that this week, we didn't risk the 700. We risked $500, right? We risked the 5% that we had to risk in the daily. If you're trading a personal account, You can run that sucker up so fast because there are no rules. There are no rules.
We got to get Ant back in here. Ant hasn't said anything yet. We need to get him in here to talk about when he took the $30 to 60K in 2 weeks.
Bro,
that shit was insane.
Yeah, exactly.
To see someone do that in your face, and I do a lot of good stuff, but when he did that for us, I was like, okay, I like that. Yeah, this is what you need. And Ish with the confidence, like when people come here, that's one of the first people they see is Ish, Alicia, TT, Kim, like Leandra. You guys understand that you're rubbing off. Like when people get here, this is what they see. Like you got to be that. You got to want to be that. There's way more people here. People are going to see you because you know what you're talking about and you got to want it. So when you want it, you do the work to get it.
And sometimes I just think we all need reminders to let you know how badass you really are. Even if you don't believe it. Like maybe you didn't understand, or maybe you never saw this before. All I'm doing is slowing this down for you to be able to see how you can eat on a regular basis every week. Win every week, guys. Not every other week, not once every 3 trades. Bruh, every week. I'm talking about you can be 100%. Listen, y'all think man, Mark be killing it on his challenges. 90%, 100%. You can do the same thing. We all have the ability to do the same thing. We just trade in the direction that we know it's going. We already know what direction, we know the direction, so we can't lose. That's what this is what I don't get, or here's what I refuse to accept. I refuse to accept that I have an understanding of the direction that the market is going to go, but I somehow reach into the jaws of victory and snatch that defeat. That's bullcrap. That should not happen. Listen, it's going to happen once or twice because you're new. But when you sit your butt down every week and you do your analysis for yourself and you see, okay, this thing is going, I see this buying. Like we looked at GC, it's going to buy, right? We knew it was going to sell first, and then we knew it was going to buy. You don't lose that trade. You don't lose it. There's no way you lose that trade. You just don't over leverage. It's NFP, it's going to be news, but I know at the end of the week, we're going to be up. So all I have to do is not use a position that's going to hurt. OG says that all the time. And I think it just goes in people's head. They don't internalize that. If you use a position that doesn't hurt, that means the market can draw you down, because that's what this computer program is designed to do. It's designed to scare you out of your position. Everybody in the group, when Selena puts those order blocks out, they say, oh, it's bullish, right? But what everybody in the group tries to do is get the smallest stop loss. And you want to shake the dice and gamble on the fact that you know how far this is going to push down before it does what everybody knows it's going to do and go up. Why? Why would you do that? You can sell it down or not, or just get you a position size, 100 pips, and go the way you know it's going. I trade differently, and I'm probably more advanced than a lot of you. If you're not an advanced trader where you can trade both directions, man, get your 100 pip stop loss and go eat, bro. Get a position size that don't hurt and trade the direction, because that direction is what's going to pay us. 2 trades, 2 wins, account qualified. Now, for time's sake, we're not going to go and do the verification stage, and then we're not going to go and do the pay part. It's all wash, rinse, and repeat. this demonstration shows you that we have the sauce in the group. We have it. We have everything we need. We have people breaking this down for us. People, market analysts, people analyzing the market, and they're analyzing it correctly because they're giving us the correct direction, as demonstrated by this little exercise we went through this morning, right? This wasn't cherry picked by me. You know, Leandra, I haven't talked to Leandra in weeks. I didn't tell her what trade to pick. You know, I talked to Elfie the other day, but we didn't talk about this. I didn't tell her what trade to pick. My point is, two randos picked two different trades. We came out with two winners and we made a bunch of money, right? Over those two trades, we made $2,100. And even if you're still working and you made $2,100, if you can make $2,100 a month and you can add it to what you're making, your life is a lot better, right? If you want to, listen, guys, that was a 10K account. That wasn't a 50K account. We're talking a 10K. That wasn't a 100K account. If you want more money, you use a bigger account. You're severely under leveraged. We eating. It's all gravy, guys. Who did not understand what we just did? Mike, we can look at GJ, but
we do GJ one time.
Hold on. We can look at GJ, but I want to emphasize what we just did, what we just saw. Do you understand what we just saw? Does everybody understand what we just did?
Yes.
Financial freedom.
Yes.
So listen, guys, I don't know, every company out there, I think they offer a challenge without that doesn't have a time limit, right? Who has a funded account that's already funded? It can be rhetorical. That can be a rhetorical question. If you don't have a funded account that's already funded, you just got here's the answer to your test. If you want to take the funded challenge route, do it exactly the way we just did it. You won't fail. You won't. If you do exactly what we just did, if you buy GU, if you buy, GU this week, if you buy GC this week, you're going to win your trade. I don't care. You're going to win. They're both going to go up this week. If you use a lot size that won't hurt you, you're going to win. You're going to win. And if you're somebody like a Leandra, if you're somebody like, well, I think like a TT. I know Leandra could do it, but I think a TT could do it. Even if because it's going to pull back first, right? Once it starts buying, some of y'all are good at adding to it and eating. Like you can use some fat lot sizes if you know how to drop down there and get you some good entries, right? But even if you don't, if you do it exactly the way we did it with this trade right here, man, you can make so much money from now on that, it's just ridiculous. And you can trade, however many accounts, and you can make money on all those accounts. So, do we have any questions over what we just saw? Brad, okay, all right. I love fire. Now let's look at GJ. Did you have a question over this, Mike?
Yeah. I was wondering, could you point out where this next order block or the current order block is at and where I should place the Fibonacci.
Okay, so let's talk about order blocks. Where do you see an order block? You see one that was here, that was bearish, that was violated by this move up that tapped into a higher order block. You see that? Then the market fell back down. Okay, so whenever we look at these charts, let me just erase my drawings here. What I want to encourage people to start doing is start understanding, first of all, where is your liquidity on the chart, right? This is your high from last week. You know, the wick of this candle is your high from last week. Where is your swing low? It's all the way down here. So your trade is going to happen in between these two areas, right? When you have order blocks that's set up, like order block, price drops, order block, price drops, NFP, right? It pushed up, it created relative equal highs, it took the liquidity from the top of this order block, then it closed below. Anytime you get a wick up and price closes below old highs, that tells you the market is going to run in the opposite direction. You tracking? So we should expect GJ to push down. So from this chart, you can't fib this candle. I guess you can fib the candle, but it's not going to give you a good fib reading. Why? Because this wick means that price went up and it already pulled back. So what you want to do is you want to drop down time frames until you get, okay, here's a series of red candles, right? This series of red candles broke this low. Now, according to the ICT concept, we need price to push back up into an imbalance before it drops again, right? Do you understand that?
Yes.
Okay, I just dropped down from the daily to the 4 hour because the 4 hour will allow you to see this swing low better than that daily. On the daily, we just said this low. This was the low. On the 4 hour, this is the swing low that was violated right here. So on the 4 hour, we want to look, the swing low was violated right here. Price should have pushed back up into the imbalance area. I mean, some people would consider that a push up. Let me see how far it went into the imbalance. Okay, to me, that's considered a closed imbalance because it pushed back up 50%. So if you had caught this real time, this is what you want to see. You want to see price push down, break the swing low. You want to see it push back up to at least 50% of the imbalance before it pushes down again. So now what I think is probably going to happen is we're going to break this low, right? And then we'll retrace again. So at some point, price is going to come back up to it to address this hole, but I think it won't be until we break this low right here. I think price is going to push down, break this low, and then retrace. And when it retraces, it may retrace back up into the rest of this imbalance, the push down. I guess it's always a possibility of it pushing up immediately. I guess this can be considered as chop on the 15-minute. It broke this high. So maybe this pushes up to this imbalance. You see how on the 15-minute we broke this low right here? Price will at least push back up into this imbalance before it sells. But you have to make sure that you get another chalk once price gets into this area right here. All right, price needs to come back up in here and sell. But price could come back up in here in bullcrap and then push higher into this zone. I really suspect that price comes here and pushes down to break the lows.
And that's what it's supposed to do, right?
Price
You got to
here.
know what it's supposed to do in healthy price action, what healthy price action looks like. That's what it's supposed to do. It doesn't mean that it's gonna do it, but you need to know what it's supposed to do. And then when it starts hitting these areas, you start gaining confidence because now you're starting to see healthy price action, what it's supposed to do. And then when it gets to doing what it's supposed to do, you catch it. You don't want to do it unless it's doing what it's supposed to do and get comfortable with that, the basics. And then you can get technical, but do the basics.
So honestly, I think there's an easier JPY pair to trade than GJ. But you know, since you ask about GJ,
Yeah, I like GJ because it usually gets a lot of volume, really, no matter what the session. Like London session, it has a lot of volume as well as New York, but that's why I fuck with it.
Are you profitable?
No.
Okay, so let's have a discussion about volume and profitability. US 30 has a lot of volume, but people lose a lot. NAS has a lot of volume, but people lose a lot. Volume is great. Volume is great if you have the market cornered, right? If you're not a great reader of the market, then volume can hurt you. And here's what I mean by that. So there are a lot of different spots on this chart. There's a lot of holes that need to be filled. And it's going to require some patience from you as a trader, right? So first of all, you'd have to be able to open your chart and do exactly what I did. You have to find out where your liquidity is, what needs to happen on this price chart. If you can't open a chart and see what needs to happen, then you're already behind the power curve. And in my opinion, when I open this chart, right, even when I look at this on the weekly, the setup is not the best based on the weekly, right? I expect for price to push back up into this area and then fall. So maybe as a trader, a newer trader, I'm not messing with this until price comes back up and deals with the imbalance in this wick. Then I would sell it. But if you look at other JPY pairs that may have a cleaner setup, maybe it won't have the volume that your trade has, but maybe the setup is more clean than your actual trade. So maybe you would like to take advantage of that trade. Or if I can make a suggestion, and this is for anybody, not just you, but if you use a lot size that doesn't hurt, right? And we're all biased for these JPYs to sell, right? If you wait for that trade to push up and then it starts selling, and you're using a lot size that doesn't hurt, for instance, this EJ trade, which also has a lot of volume. This is about a 170 pip range that it has to go to the top. So if you wait for it to push up 70 pips, maybe you can use your 100 pip stop loss for the sell, right?
Right.
GJ, if you wait for GJ to push up, you know, let me see how many pips it is to the top. So this is 161 pips to that zone, 138 pips to that zone. So in my opinion, if you're trading GJ, I'm buying it up. I'm buying it to this zone and then I'm selling it. That's what I'm doing. I'm not worried. I wouldn't worry about the every move back and forth, right? So this could very well sell first, break this low, buy back up through this imbalance to this imbalance. Or it could buy up to this imbalance, sell to break the low, then buy back up here, and then sell. It's 1,000 different scenarios. If you're trying to catch each individual move, your risk factor is going to increase. If you're just worried about the sell from this zone down, then you're only going to worry about the sell from the zone down, right? So if I'm you, I'm gonna wait for the push up and then it start to sell, and then I'm going to sell it, and I'm going to sell it down. I'm going to sell it with a more generous lot size. I mean, a more generous stop loss, and I'm going to sell it down. So when I start selling this, I'm going to protect the top of this imbalance right here. So the higher it pushes up, the better off that it is for me. And then I'll sell it. Now you mentioned GJ. GJ is going to sell. I have no doubt about that. In my opinion, it's not the greatest setup. In my opinion, EC, GC, AU, GU, all of them are way better setups, setup-wise, clean looks. And let's look at it. This is what I mean by clean looks. AU tapped in, started pushing up, right? We understand the news by AU. If you look at the Dixie, the Dixie went right to our zone, pushed off. It's getting rejection. We expect the Dixie to buy up, right? And then push down. If I look at the Dixie on the weekly, it rejected that area that we talked about last week, right? If you look at the Dixie, it went down, it broke these lows. It came back up to the imbalance, the same way ICT preaches it. Came back up to the imbalance, and now it's selling. What I expect is for when the market opens, the Dixie retraces to cover any imbalance in these wicks. Like right here, I expect the Dixie to come back up to this level before it sells off, and eventually breaking another swing low. We can probably expect another retracement, but when it sells off, we're breaking this swing low first, then this one, eventually down to this level, okay? You can wait for the Dixie to sell before you get in for the buy on any of those GU, AU, or you can sell GU, AU, any of those EU, any of those USD pairs. All of them are the same. If you have been trading these pair up, like most of us have had these conversations and been in these positions, and you can probably see them better from the 2-week charts. Here's a bullish order block. Price came and tapped in. Now we expect this candle to turn blue. I mean, to turn green, and we want to see another bullish order block by the end of the week. If you've been trading these, to me, these are a lot cleaner. These setups are cleaner than the GJ and the the JPY pairs. If you're trading the JPY pairs, similarly, again, I can't stress this enough. The setup is not as clean, but you have to wait until it pushes up to deal with the imbalance, then get in on the sell. if you don't know how to drop down in your time frames to look for your imbalances and understand where price needs to come, you're going to be more lost than anything. Did that answer your question? Hopefully I didn't confuse anybody.
Yeah, no, that was clear. You gave me a lot of clarity. I appreciate it.
All right, cool.
You didn't tell them where to put the fibs, how to use the fib.
So let's talk about the fib. And it doesn't matter what time frame you use the fib on. If you're doing it from a weekly candle, you want to go the direction of the weekly move from the top to the bottom, and you want price to pull back 50%. Now, I can't use this candle because, again, it's a wick. I want to drop down till I get a candle with no wick, right? So because this is a weekly move, I'm going to use these 3 candles together. So I'm going to fib that down move. I'm going to fib from the top to this wick at the bottom. And my golden zone is where I expect price to pull back to before it drops. Now, here's what's significant. Notice that my golden zone is the area that I've already got marked up based on what I saw as far as the imbalance on this 4-hour chart. See that?
Yeah.
Okay, so that is a great confluence, right? So I would be comfortable with looking for a trade to happen here. Now, this group, we're fans of the 78, right? So if I'm taking a trade at that 50, damn it, I'm covering the 78. That's just me, right? And, since I trade a funded account, and a bro man ain't greedy, I'm going to use this 100 pip stop loss. That's what I'm going to do. And I'm going to take the 5%, of that 50K account. I'm going to take $5,000 and divide it by 100. So I got $1,000 to drop on this trade, right? 5,000 divided by 100. I mean, 5,000 divided by 100 is 5, right? 500. Let me do
50.
5K.
Yeah, 50.
It's
50.
Okay, so I got $50 a pip to drop on this trade, which is a 5 standards. It's 5 standard lots. And really, it would be a little bit more because, again, this is a JPY pair, but I would just keep it at 5 standards. So when price comes up here, I can drop 5 standards on it, and I can look for these 547 pips to the bottom. Does that make sense?
Yeah, I appreciate it.
When we get stuck in our own faculties, we don't have these conversations. You only have your own perspective. If you have people around you that are already looking for this, you guys are all looking for the same thing. You don't get in until it gets there. So when people disappear, this is what they're looking for. Nobody has to say anything. If you know how to read healthy price action, anybody that's trading this pair should be looking for their entry right there. It doesn't mean that it's going to be right, but you can't enter until it hits that level.
There you go.
Because that's what you're supposed to be doing.
And
then the trust starts to develop between our people because we're all looking for the same thing. You got to understand the dialect.
And look, guys, just use your alert, man. See, just right click, add your alert. So you don't have to be prisoner to the chart. So maybe you like GJ, so you add an alert. But you say, man, oh boy was talking about GU. Maybe you add your alert on GU. Maybe you add your alert on AU or GC or EC. And any one of those pair is going to pay us big dividends, man. Like, look at this candle, man. These pair are going to come through. This is going to pull back. This is a weekly order block. It's going to pull back, and it's going to pay you. So if you fib this weekly candle, the golden zone is here. The 78 is here. Notice where I had my entry at the 78. But if you use lot sizes, again, that don't hurt, you'll be fine. Here's a swing low down here. I mean, we've talked about this, man. We talked about it. Here's the swing low. So if price comes down to this swing low, take the freaking trade, right? You can enter here at the swing low. It doesn't really matter to me what the stop loss is, right? Because you're going to get paid on the move to the upside. So if I take this trade next week and I have a 67 pip stop loss, this is like a 67 pip stop loss, and price goes to where I think it's going, to these 662 pips, right? Bro, that's a 9.76 trade it's a weekly trade, which means it's going to be several weeks before it finishes. But here's the beauty of it. Once I'm in this trade in my funded account, I don't give a shirt how long it takes. It's less work for me, because however long it takes to get up here, I don't have to close it. I can hold my trades over the weekend. I can hold my trade past my payout period, and I can get paid out once this gets to the top. This is a 9.76 trade, right? I'm risking 5%, not 1%, 5%. So you just multiply this 9.76 by 5, and that's what it's going to get paid out at the end. But y'all don't understand me, man. Y'all tripping.
Well, why don't you let us understand if you fit in from that intermediate swing high to the swing low?
You said what?
That swing high, the intermediate. No, the intermediate one, that one. Swing, fib that down move.
Why do you want to fib the down move?
Yes, because I'm trying to see something.
Trying to see something.
Because that green candle is probably pulling back either to the 62 where it's at, or the 78 before it's going to pull. So it may go up to the 78 before it pulls back, or maybe not. Maybe it's going to immediately pull back.
That's the beauty of it. We get to, when we know this, that's beautiful, right? It doesn't mean it has to play out, but you know what the probability and possibility of it doing that, right? Yeah. It's a risky play because it's an alternative high, right? It's not the real high, it's just an in-between high. So you can get in trouble there, but if you're going to take a trade and it plays out properly, that's where you catch it at.
Right. And here's
now you could take it.
Here's what I think. Even if the first 4-hour candle gets us there, I think the call to action, where we should take action as traders, is when we get that bearish order block. So when you get that bearish order block on this 4-hour, we know it's coming back down here. That's when we get in for the sell. Once it gets down here, then we transition into the buy. You're going to win, right? Or if you're not that trader yet and you're just looking for the buy, you can wait. The buy is not going to happen until maybe Tuesday or Wednesday, right? Because that's how it normally is. It normally takes a couple of days for this to push down, right? But I'll get on the call Tuesday and I'm like, man, this played out perfect. I already made, X number of dollars. Then you can get in and you can buy it that night. That's how it normally works for the people who get on that Tuesday call. I mean, most of the time on Tuesday is when we've been getting the change. That's when the market normally takes out that Tuesday night. But my point is this: whether it sells now or it goes up here to the 78 and sells, right? We know we broke this high. We broke these highs. We need to pull back. even if it comes all the way down here, which it could do, before it goes up, my stop loss takes care of it. And where my take profit is, could be a month, it could be a month out. It could take it a month for it to get here, or maybe it's just the next 2 weeks. I don't know. However long it takes to go to these 662 pips, it's going to happen. It's going to happen. And that's when I worry about getting my payout. Now, because I'm risking 5%, 5 times 9, you know, that's what I'm going to make, or 5 times 10, pretty much, you know, about 45%, you know, 46% is what I'll make when this move is finished. You can make it too. The same setup applies to all of us. That's on on EC. GC is just, it's the same setup, different pair, right? They're both going in the same direction. We've been talking about these for a few weeks. I just happen to like the EC setup a little better, but this is the same thing. It's going to pull back, fill in the wick, and we're going to push. TP1 is going to be the top of these wicks. TP2, which we will hit eventually. It's going to be up here. It's going to be a high pip count. If it pulls back to this line, is be about 510 pips. Still, it's probably going to go higher up here. But I use this TP because this was on the fib. When I fibbed this move, this was the second arch on the fib. Now we've discussed the long-term play for GCAD. You know, we discussed that at depth, you know, when we looked at that Oliver Velez type setup. And I do believe we're going to get it. But my point is, we all have some incredible opportunities this week. And I really think that that if you want to be successful, you will. I think that's what it's going to boil down to. Now, you know, Sean is always telling me that we got a lot of Michael Huddlestons in here. Everybody wants to do their own thing and be right. And I do understand it. But I just demonstrated what works. And you don't even have to come up with your own way of doing it. I've demonstrated right in front of your face on this call using 100 pip stop loss both times.
And the thing is, when people are profitable, that's where they're catching the move. They're just catching it at the right spot. So whatever the strategy, whatever the technique is, whatever's getting you to catch a proper entry, it's all the same.
And I'm not suggesting that the only way you can win is using 100 pip stop loss. That's not, I don't want you to come away thinking that. Because I don't use 100 pip stop loss most of the time. But I'm just trying to show you in the most generous way possible that you can be successful because we know the direction of the market. And at a very basic level, if you have a very basic understanding, if you understand the market like Isha, and I'm not saying that to dog you, Isha. I'm just saying that because you've been trading, you said for 4 months, right? And I remember when I was trading for 4 months, I wasn't on your level. But my point is, if you attend this call and we're telling you every week, hey man, this is going there, this is going here, hey, this is going there. If Selena is taking her time and publishing a document every week with every order block on it, but we're still finding a way to lose, damn it, we got to stop. There's something wrong with us.
And we call it what it is, right? You got to continually call it what it is. Then you're going to get in line, right? Not in line with me, in line with the market on the right side of the move. Always. When you get on the right side, you really can't fall off because you're going from level to level, back and forth, back and forth. You'll be making money in both directions.
Right. And even if you can't, you know, like OG is very advanced. So even if you can't trade both directions, just trade one. Trade the direction that you know that the market is going in.
Right.
You know, that's all I'm saying. You know, it can take you 2 years, 3 years to get to where OG is, where you can trade both. You can trap it and all that stuff. Those are advanced techniques that they're going to take you time maybe to learn or understanding. But what I'm talking about is a basic one direction move. If you're expecting to buy. Most of the time, you're going to end up buying on a Tuesday or Wednesday. If you're expecting to sell it. Most of the time, you're going to end up selling on a Tuesday or Wednesday. And the reason I say that is because the market is going to go the opposite direction first, just like ICT says in the Power of 3 video, and then it's going to go the true direction. So if you understand these basic concepts, you can be wildly successful. Even if you don't have the best entries, even if you don't have the tightest stop loss, you can be wildly successful.
I mean, we're going to have bad habits, but ultimately you shouldn't, right? Your trading plan should be intact. You should be putting your trades in proper positions. When you put them in proper positions and you lose, that's one thing. But when you're putting them out of position and you lose, it compounds your losses. You have to put them in the right positions. And then you take the loss from there. You'll lose less. This thing about Tuesday, Wednesday, if you don't know that, like I've been told that, right? It's going to be the Wednesday pivot. That's what we call it. London pivots from session to session.
You just
open up in the week. I don't trade Sundays. Why? Because they think it wants to do one thing and it's going to do the opposite first. And it does it all the time. That's why you hear people say they don't trade Sundays or they don't trade Fridays, because they're trying to catch an opposite move. And this was great with US 30, great example, that it was a bearish weekly order block going into Thursday. You can't catch a buy, and it proved it right there in dramatic fashion. Do you think you're going to catch a buy on a Thursday and Friday when it was a bearish order block? No. That was explosive what happened right there. And it was amplified. It did what it was supposed to do, right? You got to call it what it is.
Yeah, I caught 150 pips off that US 30 drop.
Hey, and this is just the beginning. You're going to be playing with US 30 like it's an old yo-yo because you know how to enter properly, right? Do that and come in here and we can enjoy, you know, it's no longer teaching anymore. It's a conversation because everybody knows the dialect. Now we're having conversations about where is the entry, and we can trust our person to the left and to the right. We're not going to be right all the time, but majority of the time, because our wins outweigh our losses.
But it's a lot of people in here.
I have a question about the order blocks. Okay, so I see that the order blocks, are they always placed in the Swing Traders channel?
Yep.
Okay, so the one that was the two that were posted this morning, the one for 7/31/23. Does that mean, I mean, I've been looking back at the order blocks. It appears that they've already happened. Is that correct, since the date of it is 7/31?
No, that's not correct. So
okay,
let's look. And maybe you're looking at the monthly order block. Let me see.
7/31 should have already happened. What was Friday?
Yeah, I guess 7:31 may have already happened, but
Yeah, I was
well, I
on the
think
Monday.
so these are weekly order blocks, 7:31.
Yeah, this is August something now. So this already happened.
Oh, yeah, she got the wrong date. So these are this week's because we just looked at EC. Not only does she have the wrong date, but she got the wrong color on some of these too. Because EC is bullish, and it should be green instead of red.
I
So
need to Selena about this sloppy work.
Maybe
The
she was, maybe she was something else.
hey, Isha, damn it! When you start doing this, don't come with these errors.
Y'all gonna get on Selena.
This
Damn it,
type of
Selena, I
shit
know
up.
you're working
Set a
for free,
motherfucker
but
back, you know?
get it right, man.
Look, she spelled it right.
Yeah, you should be awake then. These are the
You
things
spelled it right.
to keep you awake, keep you alert, keep you on your toes.
So keep you in the poorhouse is what it'll do.
If you can't read.
So these are correct. Does US 30, did it have a bearish week? Yeah, it did.
Yeah.
It did. Okay, yeah, so these are correct, Tony. We talked about this EC order block that was bullish. She just has the wrong date and the wrong color. I already know what happened because she told me that she was discombobulated.
So we're looking for GU to be bullish, but it's bearish for the week. So are we looking for a bullish?
Let's talk about that. Who's that talking?
T.
Okay, TT. Is that TT?
Yeah.
All right, let's talk about this. Where is the bearish order block? Is it
Weekly?
Well, hold on. Is it above the moving averages or below the moving averages?
Let me see.
I can answer it without even looking at it, but go ahead.
Well, yeah. I just want to talk about it because I see this huge, rejection and everything, and how it tapped into the 95%.
So for everybody's edification, because a lot of people don't even know what we're talking about. GU on this sheet says it's bearish, right? It's a bearish order block. Now, we're going to go to the charts and talk about how we should be trading order blocks in general. This is the order block that Selena's talking about, the bearish order block. And the way we trade order blocks, we should buy it in order to sell it. So if you believe that this is going to sell, you buy it first and before you sell it. And if you don't do that, then you have to wait for it to reject on the 4 hour, right? You see how the 4 hour crossed over? You got to wait for it to reject and cross back over cross under the moving averages on the 4 hour before you sell it. If you don't do that, you're going to screw yourself. I don't anticipate that this will break back under the 4 hour and start selling. I anticipate that this will end up buying and just become a buy. So what you're going to see when the market opens, you're going to see it push back probably below the moving average. And I know some of y'all are like, well, you just said it wasn't going to push back below the moving average. Okay, let's talk about it. We just got finished selling, right? This is a downtrend. Does everybody agree? We just got finished pushing down. Now you get chalk. You get the break, the change of character. We break these highs on the 4 hour. We expect price to pull back and give us an optimal trading entry. then we expect to go long, right? Now, if we squeeze this chart in and we fib this impulse move to this impulse move, and we get this pullback, it's probably going to be damn close to the 78, right? Probably about an 88.
95, maybe.
There you go. This thing pulled way back. So if you were a person who was long on the British pound, and you just so happen to use that 100 pip stop loss, I'll catch you, boy. If you used a 100 pip stop loss and you just wanted to enter at the 78, you know, and use that 100 pip stop loss because you know it was NFP, or just because you know that 100 pip stop losses are 95% winners. I don't know. You know what I'm saying? I don't know. But if you just trade it like this and you use a 4% or your 5%, then when this trade pushes up to the top, you're going to win 20%. But hey, man, y'all ain't gotta listen to a brother like me. What the hell? I don't know what the hell do I know?
Not much.
You're so crazy.
Hey, yeah, this is going to buy. This is going to hit your TP. This is going to pay like a way. And right now, she's looking kind of heavy. So you're going to get a pullback. You're going to get a 78% pullback because the dollar is going to pull back too. The dollar is going to buy up. This is going to pull back. It's going to let you in the trade.
So the new fib for the pullback is this bottom to the top.
Yeah, I mean, you know,
And
come on, TT, you know this.
And
all you got to do is fib from this low.
Yeah, from there to there, and then right there at the 78.
Here's your entry. I don't even have to change my stop loss. Now my ooh. That can be damn a 50% trade, bro. Listen, man, y'all. Hey, man, I'm tired. Hey, this is the type of sauce that Swaggy should be giving us, man. All that money they making for charging. Bruh. Yeah, this is a good trade setup. What else y'all got? What y'all want to talk about? OG, you got something for the kids?
You're getting ready to start this golf tournament.
Oh,
can you hear me?
Yeah, I can hear you.
Yeah, we're about to start this golf tournament. I ain't played in 3 months. I'm about to tear some shit up though.
Oh,
yeah, we good though. I'm still dangerous.
Yeah, don't carry no shoulder. Try to go.
It says like ride the bicycle, you don't forget.
Oh yeah. But yeah, man, like just tapping in and making sure that everybody's reading these things properly, man. Stay on it. The consistency and persistency of reading healthy price action. Anything that happens outside of healthy price action, leave it alone. Do the healthy stuff, do the basics. Once you got that, and you got people around you that got that, we got a power team. We're developing a power team right here. Everybody here plays a role. And stand on that. Your confidence level should be up. If I got to boost you up, I got to hype you up. You know me, I'm hype. So we're accurate. You got to be accurate. That's why playing a role, you know, intentionally coming in and doing the order block list, stuff like that, that'll enhance you because you start seeing things. You're no longer in the back, you're in the front. We want everybody to come to the front. Your voice needs to be heard. Someday, somebody's going to only be able to hear it from you, right? Maybe everybody won't get my style. I'm a little belligerent. Financial freedom will get you there, right? You can be yourself at that point. And nobody can say nothing because you're pulling money out of the place where money comes from the source, out of thin air. Who else can say that? If you're in trading right now, you're in the right place. You have to believe that. You got people here who believe it. You got people here who are profitable. You have people here who have graduated. And all you got to do is tap in. And then you're graduated. And now it's your time to pay it forward. No better place to do it than here. This is our stuff, right? I know I'll be dropping F-bombs. I'm hyped.
Yeah. Let go.
Now or forever hold your peace. Should be a lot of wins this week, man. A lot of wins.
I have one more quick question about like entry type question and stop loss type question. For an example with GU, like we're looking at, as we look for the 78.6 entry for a pair like this, our last line of defense where our stop loss goes is still that bottom wick. Is that not correct?
This swing low.
Yeah, the swing low of the bigger picture.
I mean, this swing low.
Wait, huh? Where you at? That swing low.
Yeah, this swing low. If that swing low is violated, the idea of GU being bullish is not good.
Okay.
Now,
yeah.
if this is violated, I mean, you can still catch a rebound trade that, you know, because it broke a swing low. Eventually, it's going to turn around and go back up. But yeah, we want to see. I want to see this swing low, this new swing low, respected, and I do believe we're going to get that respect, and it's going to go higher. So here's my thing, TT. We're all the way down here on the 4-hour chart. I'm taking this trade based off of this 2-week chart, not the 4-hour chart. My entry is coming off that 4-hour, but my trade setup is coming from this 2-week chart. I'm expecting price not to violate this bullish order block right here.
Gotcha.
So that second swing low that we talked about is the bottom of this order block. So as long as this 2-week order block holds serve, I'm good. And I believe that will be the case. I believe that this 2-week candle will be bullish. That's just what I believe. So I believe that we have a week to get from where we are now to the top. So probably 300 pips this week. It'd be more than that. 400 pips this week. That's what I'm looking at. And the reasoning, the fundamental reasoning behind it started with that bad jobs report. That's the first bad jobs report that we got. So we have probably CPI this week.
Yeah, on Thursday.
Yeah, so CPI is, we know inflation is not high. We know that. So a bad CPI number is going to be another catalyst. Yeah, we're about to get some buy action, some strong buy action this week. So fundamentals support price moving up too. So yeah, I like this. I like the trade setup.
And it already pulled back. See, it touched where it needed to touch. Now it's already pulling back.
Yep. So it'll push down, it'll fill the wick. Again, that 78%. We already looked at it on the 4 hour. Because we already saw the change of character on this 4 hour. That's why we got the push up. Now we get the pullback for it to let us in the trade, our OTE. Then we get on the trade. Bruh, this is the type of trade that you put on your funded account and you just let it sit. This is the trade. You get in with your 5% and you sit and you do nothing. You sit on your hands until it gets all the way to the top up here. You don't even have to, you don't have to close this trade out until it gets, because it's going to come from here. These 500 pips, man. I mean, that's what the market is giving you. So you don't have to do shiza until that happens. And it all starts this week. Bruh, you can't make this stuff up, man.
Patience pays.
Yes, it does.
Equals regret.
Thank you.
All righty, guys. It was great chatting. See y'all.
Thanks, yeah.
Market Streets.
Thank you.
See you in the streets.